Welcome to TradeTheMBI.com. This is John. This report is for the 6th of September, and well, we had quite a bit of activity, at least volatility-wise. Ended up pretty much right about where futures had opened for the day when we're looking at the ES here. To me, what was interesting is looking at it from this move coming down, it fits right within our Fibonacci 50%. So from the overall move and the adjustment that's been taking place, the return came right back to the 50% and was bought right back up from there, and then pretty much went flat at that particular point. You also had the North Koreans starting with another ICBM test, and that only escalates things. It does create some panic, but as I was pointing out on our Skype chat, at a certain point, even if you have the panic, fine, we've had a weak spot in the readings and that in general. But you've got a problem in the sense that where else are you going to put your money? If you're still around the next day and you're not inundated by a hurricane, which we've got another one happening, that's also going to have an impact. You're going to be forced to go back to a growing economy, which, as long as it is continuing to grow, I mean, you get hit with a second hurricane and you do some serious damage in Florida, and that could actually have some significant impacts on GDP. But this is why the euro maintaining its high ride certainly helps elevate, because keeping that higher exchange rate is certainly going to improve earnings for S&P companies. And it's still well outside of our range by quite a bit. And that really doesn't have anything to do with Eurozone activity as much as just concern about what's going on, both politically as well as geopolitically. So that's going to have an impact. And that's why you saw this, because again, terrified individuals running back to absolutely insane trade here, people going into treasuries. Bizarre. There's no other way to describe it. And the spike in oil, again, because we could tell that there was both growth situations, but also you're going to have some capacity issues, which isn't necessarily a bonus for crude as much as the growth issue is, and that really will create more opportunities. And if you get further limitation for U.S. production simply because of hurricane issues, that will fade pretty quick, so that would not last very long. So this becomes a question of sustainability with the buy signals that have come in here, particularly as it relates to U.S. production and whether or not growth is sustainable, and it appears to be so. We'll see how much of an impact, though, the hurricane issue has, and going forward, probably won't know that for several more months. But it certainly is going to spark some construction activity there, so it'll be interesting to give and take on that. Should still be a net positive. And gold, yeah, there's no surprise. This is the funny thing. People are acting as though this is like some dramatic thing. All the way back here from the original reset here, we've been pushing long gold all the way through that, and it's been a decent run. I wouldn't call it out of control like it was a few years back, but it's been pretty much right in line with expectations. The interesting part of the day was when we had the Fib retrace level program on here, we started coming back up, but we kept hitting this 50% line, which happened to correspond with the short algo, and we just kept running it right up against it, and then finally it just started to give way, and we ended up just continuing to start trailing lower, and then finally all the way back down here it dipped. Now you're seeing all these other little numbers as part of the other program. What it's doing is it's refining all of the buy possibilities with the DOC, and what it does is creates a series of numbers for each of the different conditions it's set up, and literally until you find a 7, actually I'll increase the size of this and you'll be able to see what that looks like. Right in here it produces a little number, and so there's a 5, 6, and a 7. So that would be the dip below the green DOC with the orange, then the red, and then obviously whether or not your shakeout reading is positive or negative and has the yellow above the magenta, and or even if the histo is above the yellow. So all those little criteria go in, but would have actually moved it, and then it's going to be tied directly to this, so it would have actually moved the buy a fraction back here as well. We did a secondary signal a little bit further up here at this particular point. But needless to say, it was the right call and came through nicely. But this is very modest, and I think that you're going to look at it from a, if we put the fib level back on here, we would see that it's just going to hit up against resistance. And this is the easiest way. You just go to enable, and you can just click the ones you want, and it'll automatically go right back onto it, which is a nice feature. Makes for quick adding and subtracting. So you can see we started down here at the base, reached the 50%, came slightly above it, and then started a new shakeout, and that's led all the way to the upside. And that's because right here we started seeing the falling highs, which causes price to want to reach it, and then finally did. Now it's just riding that upper curve, and it's going to want to expand this narrowing range again. All in all, I don't look for it to do a whole lot. We probably are going to just move back up to early day ranges from before. I mean, we're pretty close to back to where the open was from futures before. So nothing pretty much changed. You just carved out a few. What you really got to see is move back up to the 69 range, and then we'll see where the market's going to go from there. But biases still have to be, even with the risk elements, back to the status quo, which is pretty much a little bit higher than where we're at. So we'll see if that plays out that way, but that's the way it's looking at this particular point. As always, though, trade well. We'll talk again later.